Okay, what is the amount of equipment that should show on the consolidated balance sheet? And they're asking me at December 31st, 2020. So I'm going to pick up the book value of the parents' stuff at December 31st. And so the parent had what, equipment of 280? No. 364. 364? So I know I have to pick up that, right? That's 364. And then I go ahead and I pick up what?
Book value of subsidiary.
Book value of subsidiary, they tell me was 280, I guess. Just looking right here. Just looking at the answer. And then I have to do what? Take the fair value allocation less 1 year. Okay, I take the 140, I'm going to add that. But they did take, by December 31st, on the consolidated, they should have taken additional depreciation, right? 140,000 divided by the 10 years. So I've got to subtract off that 14,000, which is 1 year's worth of depreciation. That's how they come up with this 770. Question? Okay, good. Number 20. And they want the acquisition value attributable to non-controlling interests. And I think you guys are probably getting bored with this by now, which if you are, that's good because that means you'll get all these right on your exam. 234,000 divided by what? 0.90 gives me 260,000.
Yes.
It's right here. Okay, times the 10%. 26. I think we've done that enough times. In consolidation, January 1st, 2019, what adjustment is necessary for Hogan's building account? Where's Hogan? Here's Hogan. I don't know why they say they're net assets because they're talking about assets, period. But anyway, so Hogan has what? Building book value of 10, fair value of 8. Should we write it down to the lower fair value? Needs to be decreased by 2,000. And then we've got this next one. And we are now crossing the line into questions that are not multiple choice. So you'll get some things like this in number question 21, where I might ask you to do a series of things. And you're going to have to fill them in sort of the way we did with that last question on the first midterm. Okay, so it'll be something like this. So we've got Caldwell, Inc. acquired 65% of Club Corp for $2,600,000. And just looking at what this question wants to know, what's the amount of goodwill? So we would pick up what? 2,600,000 divided by 0.65, meaning that you're saying that the company's fair value is $4 million. Right? We've done that now 52 times. Okay. And then they tell me that the total acquisition date fair value of the net assets was $3,500,000. So if the fair value was $3.5 and I've acquired $4 million worth of value here, then the goodwill must be $500,000, right? Number 24, determine the amount of non-controlling interest share. We've done this 52 times now. It's the 4 million times the 0.35, right? 65% was the controlling interest, 35% is the non-controlling interest. January 1st, Janssen acquired 90%, blah, blah. And they say, guys, prepare a proper presentation of consolidated net income and its allocation for 2019. You know, it's not like we're saying prepare a financial statement or do it a certain way. They're just saying present it, and as long as you don't write it, you know, sideways or something, it would be presentable. Okay, they just mean be neat. Okay, is what they're basically saying. So you come down and you look, and for 2019, Janssen's income is, and what do they want? Consolidated net income. Okay, so we pick up what? We pick up the parent's net income. They tell me the parent's net income is, do they tell me the amount or do I have to calculate it? Right here. They tell me it's 308, right? Without considering the investment. So I pick up that 308. Then I pick up what? I pick up the subsidiary, and the subsidiary they tell me is 98. So I pick up that, and then they tell me that there was 11,000, I guess somewhere in here because it says given, 11,000 of amortization of any excess value on the equipment or whatever, I guess. Okay, and so I subtract that out, and that gives me what? That gives me the 395,000 consolidated net income. And then if I want that part that is attributable to the controlling interest, I take what? I take the portion of the subsidiary's net income, which was 98,000 minus the excess depreciation, and of course it's times 10%, right? And what's left goes to the controlling interest, the 90%, right? Okay. What is the non-controlling interest balance at December 31st, 2020? Now they're going to make me work through what? 2 years, but it's very easy because I simply do what? I simply pick up the beginning balance of their common stock and their retained earnings, and I add in what? I add in the fair value difference. Now this one was a little bit different in that they called out the 530. They just come right out and tell you it was appraised for 530. And just out of curiosity, I went ahead and took the 477 and I divided that by 0.9 and I got 530. So they gave it to me there, but you could also calculate the way we've been doing. Okay, so even if they didn't give it, you could still get it. So you take that 530, okay, really, and then that's the amount of the total fair value, right? Because we're going to do everything on total, and then we're going to multiply the ending result by 10%. Okay, so they take the 98,000, which was the total income of the subsidiary for the first year. They subtract that additional amortization, so there it is, net of the amortization, right? Okay, the income. Then I subtract out the dividend, and it was dividends they told me were 42,000 per year. Right? So the dividend was 42,000 per year, so I subtract that out for year one. Then I go ahead and I've got the what? I got to do year two because they're asking me at the end of 2020, right? So now I go ahead and I say, well, the net income was 126 for year two minus the amortization of 11. That's 115. Take out the dividend. So I basically take the beginning amount of the stockholders' equity, and then I just do a statement of retained earnings for the next 2 years, don't I? And that gives me the total, which was 648. And of course, if I want the non-controlling interest part of that, then I just multiply. And remember, I was saying you're probably better off doing it that way. So you just multiply one number by 10% versus every number by 10%. So you'll get something like that, something like those last couple that don't have the choices, obviously, but they're not that much more difficult than the ones that have the choices, right? Question? Okay, good way to study for this test then is to go ahead and look at the chapter. Chapters what? 3 and 5. Look at the chapter 3 quiz. This chapter 5, this practice midterm. Okay, and I think you should not have any surprises when we look at the real midterm on Monday. It'll open at 12 o'clock noon. It'll close at 12:01 on Tuesday, right? And then we'll reconvene on, you don't have to come here to take it. If you want to, you can. You don't have to. And then we will reconvene on Wednesday at our regular time at 6 o'clock, right? Okay, guys. See you.